Why are we cutting rates in an environment where we have the market at all-time highs? Corporate earnings at all-time profit percentages, as far as the most profit margins we've ever seen. All-time revenue numbers. Net income numbers are obviously off the charts. Price-to-earnings ratios, let's say, you mentioned one earlier. Our PE ratios are pretty high too. And then, of course, always consumer spending numbers are at all-time record highs. Maybe the housing market's a little slow. Maybe rates feel a little bit higher than they typically did in the past, just because we got to zero interest rates. And that was clearly not a great move, as we've seen overall, because what it did to inflation since then. Now we think that the rates have to come down again because they just feel a little high. The reality is rates should be right where they should be because the market is taking care of them. And that's the biggest thing that you and I have talked about. And I appreciate your tutelage of me in a way where you've been like, well, Scott, I know what rates should be. And it's like, where? Where the market says they should be, not where the Federal Reserve says, oh, this is what we have to do and why we have to do it versus what the markets and economy need. I would just implore the Fed right now, don't do any more cuts. If you go over, say, 3, 4, 5 cuts, then you're on this full cutting cycle and the market really starts to bake it in. And don't forget, ladies and gentlemen, when you get to the point when you do need interest rate cuts and the economy falls apart, you don't have them left because why? You used them all already.